Hi, everyone. Thanks for downloading Money Girl, a podcast that helps you master your money so you can live rich and love the journey. I'm Laura Adams, a personal finance expert and author based in Silicon Valley. You can learn more about me at lauradadams.com. If you're looking for resources and tools that I recommend for just about every area of your financial life, check out my tools page at lauradadams.com. In this show, we're going to talk about the different types of financial tools and products you need to create more financial security in your life. They can help you make more money, manage it the best way possible, and be prepared for the future. As always, I'll be giving you lots of resources. Instead of trying to take notes, just visit the Money Girl section at quickanddirtytips.com and look for episode number 446 called 10 Products to Make Money and Create Financial Security. That's also where you'll find the full archive of podcasts that predate what's available in iTunes or any other audio app that you may be using. And by the way, Money Girl is also on Spotify's mobile app now. Having a healthy financial life means that you manage money wisely in the present, and you're also prepared for the future. Our goal should be to create a rock-solid financial foundation so we're comfortable and less stressed out when something unexpected happens, like losing a job or business income, getting sick, or losing someone you love. And a big part of being financially successful is knowing about and using the right financial products. So in this show, we're going to cover 10 of them. Some are pretty basic and some you may not have thought about before. We got a lot to cover, so I'm going to jump right in. Product number 1 is a checking account. While having a checking account might seem really basic, according to the FDIC, almost 8% of American households don't have one. That's close to 10 million households that are, quote, unbanked. People who don't use a checking account tend to keep and carry large amounts of cash, which isn't safe. If your cash is stolen or destroyed in a natural disaster, you can't get it back. Everyone needs a checking account with the bank or credit union to manage income and expenses. It's really difficult to create and stick to a spending plan if you don't have a centralized place to monitor your cash flow. You can link up your checking account to money management software or apps like Quicken, Mint, or Personal Capital, and manage your money from there. Having your everyday transactions online gives you an easy way to track them. Otherwise, you're just kind of stuck with a manual system that can be difficult and time-consuming. Additionally, a paper or online bank statement gives you a permanent record of your deposits and payments. Having proof of payment allows you to take advantage of tax deductions more easily, like medical expenses, charitable donations, job hunting, moving, and unreimbursed business expenses. Using a checking account is incredibly convenient, and most of them are free. The best accounts pay interest and offer a wide variety of free online and mobile services like direct deposit, online bill pay, debit cards, automatic teller machine fees that are reimbursed, overdraft protection, unlimited transactions, and a whole lot more. So make sure you have a really great checking account and you're using all of the features that come with it. Product number 2, a high-yield savings account. While checking accounts come with unlimited transactions, that's not the case with a savings account. You can make as many deposits as you like into a savings account, but you're typically limited to 6 withdrawals per month. The benefit of a high-yield savings account is that they pay more interest than a checking. So it's the perfect place to save money for short-term goals like holiday spending, taking a vacation, or buying a car. You can even have multiple savings accounts for different purposes. A savings account is also the best place for your emergency fund. You have one of those, right? That's a financial safety net that everyone should have. Think about your emergency money as insurance against life's unexpected expenses, like having a big car repair bill, a last-minute plane ticket to see family, or suddenly being out of work. Figure out how much you spend each month on necessities and bills, then multiply that amount by 3. That's the minimum amount you need to keep on hand and never, ever touch except in the case of a dire emergency. Keeping your emergency funds in savings separates it from the rest of your money, and it earns more interest than you could with a checking account. While it can be tempting to invest your emergency money for higher returns, I generally recommend that you don't do it unless you have a huge emergency fund. Keep that bucket of money completely safe from risk so the full amount is there when you need it. You can open up a savings account at the same company where you have your checking account, or you can use a different institution. Some great high-yield choices include Discover Savings, American Express Personal Savings, and 360 Savings. I actually created a free download that will help you get a high-yield savings account. It's called the Online Bank Comparison Chart, and it's got some really great options. To get this chart, all you need to do is text the phrase Bank Online to the number 33444. Again, just text the phrase Bank Online with no space to the number 33444, and you'll instantly get my online bank comparison chart. Financial product number 3, while we're on the topic of banks, is a safe deposit box. Most people need a safe deposit box at a local bank branch or credit union. There is an annual fee to rent one. It varies depending on the size of the box, but it could be as little as $50 a year. You might get a lower rate if you also have a checking or savings account with the institution, but that's not required. Safe deposit boxes keep your personal documents, legal papers, and family heirlooms safe. It's ideal for valuables that you don't need to access regularly or that you wouldn't need in an emergency. Remember that you only have access to a safe deposit box when the bank is open. Most banks have limited weekend hours and are definitely closed on holidays, so keep copies, but not the originals of your important papers in your safe deposit box. So that might include powers of attorney, medical directives, trusts, and wills. Again, keep the originals locked up at home, keep copies in the safe deposit box. The contents of your safe deposit box are not insured by the bank. That's important to remember. FDIC insurance only protects money in your bank accounts up to certain limits. So make sure that valuables you leave at the bank, such as jewelry or collectibles, are covered by your homeowner's or renter's insurance policy, and we'll talk more about those coverages in a moment. Anything you put in a safe deposit box that could be damaged by water, like photos, papers, or a stamp collection, should be sealed up in a water-safe bag or box before you lock them up. The only people who can open a safe deposit box are the owners. So if you're the sole owner and die, it could be weeks or months before an executor of your estate could be approved to open it. So let key family members or heirs know about your safe deposit box and include their names on it if you believe they can be trusted. The fourth financial product that everyone needs is a retirement account. In addition to having the right banking products, everyone should use a retirement account to invest money on a regular basis for their future. Even if you want to work up until the day you die, you may not be physically or mentally healthy enough to do it. Social Security retirement benefits can help you pay your bills, but the average payout is just a little over $1,000 a month. To be comfortable, you're going to need your own investments to fund retirement, and your retirement could last for decades after you stop working. The most efficient way to invest for the future is to use a retirement account. They give you tax benefits that save money and allow you to accumulate as much as possible. The most popular retirement accounts are offered by employers, such as a 401k or a 403b. I've done a lot of podcasts about those products. Many companies also include matching benefits with these plans. That pays you additional contributions when you invest your own money. So if you get a retirement plan at work, make sure that you're participating in it, especially if there are matching funds. Now, if you don't have a job that offers a retirement plan, or maybe you're self-employed, just about everyone qualifies for an IRA or individual retirement arrangement. And if you work for yourself, please take advantage of retirement accounts for the self-employed, like a SEP IRA or a solo 401k, and I've done podcasts about those products as well. Just be sure that you won't need the money that you put in a retirement account before the official retirement age of 59 and a half. I don't know why they chose that number, but that's the cutoff. If you take money out before reaching that age, it typically comes with a 10% penalty in addition to income tax on any amounts that were not previously taxed. And by the way, if you want more information about the rules for different types of popular retirement accounts and some great places to open them up, I created a free one-page PDF download called the Retirement Account Comparison Chart. You can get it in the notes for this show on the Money Girl page at quickanddirtytips.com or by simply texting the word RETIRE to the number 33444. Again, text RETIRE to the number 33444 for the Retirement Account Comparison Chart. Financial product number 5 is a brokerage account. I hope that you'll max out one or more retirement accounts every year and still have a whole lot of money left over to invest. Once that happens, be sure to open up and contribute to a regular investing or what's known as a brokerage account. You don't get the tax benefits of the retirement accounts that I just mentioned, but you can contribute an unlimited amount each year and withdraw money at any time without penalty. Check out brokerage accounts at sites like Betterment, Future Advisor, Scottrade, Fidelity, and Vanguard. And again, I'll have links to these resources in the notes for the show. Now, let's talk about how different types of insurance products help you create an enormous amount of financial security. The sixth financial product that everyone needs is health insurance. Even if you're young and healthy, you still need health insurance. Even a short trip to the emergency room for the flu or a broken bone could leave you with a massive medical bill. And being uninsured and having a serious health condition could be financially devastating. That's why Obamacare requires most Americans to buy health insurance, no matter if you want it or not. You'll be charged a penalty for any time during the year that you remain uninsured for more than 60 days. Depending on your income and family size, you may be eligible for government assistance to reduce the cost of health care. You can learn more about that at healthcare.gov. Choosing a high deductible plan reduces your annual premium and also makes you eligible for a health savings account. I love health savings accounts. If you're not sure what that is, be sure to go back and listen to podcast number 391 called How to Save Money on Healthcare with an HSA. The seventh financial product you need is auto insurance. Just like health insurance is required, most states require you to have at least a minimal amount of auto insurance. However, depending on your income and net worth, it's likely that you should have a lot more than just the bare minimum. And also, if you don't own a car but you drive other people's cars, you still need auto insurance. Auto insurance is a collection of policies that protect you against financial loss in three major ways. You get property coverage that pays for damage to your car. You get liability coverage that pays for your legal obligations to others if you damage their property or harm them in an accident. And there's medical coverage that pays for the cost of treating accident injuries and sometimes for lost wages and funeral expenses. You should have enough liability insurance to cover the total value of all your assets, such as your home, vehicles, savings accounts, and non-retirement investments. So think about what that amount is. It's probably pretty big. That's the amount that's at risk if you injure someone in an accident and we're involved in a lawsuit. The eighth financial product you need is home or renter's insurance. Unlike health and auto insurance, you're not legally required to purchase home or renter's insurance. However, if you have a mortgage, the lender requires you to have a home policy to protect their financial interest in the property. Basic home insurance pays for claims when a natural disaster like a fire, tornado, or hailstorm damages your property. Your possessions like furnishings, clothes, and jewelry are generally covered up to certain limits. And there's also a liability portion that covers you if someone gets hurt while they're on your property, or maybe your dog bites someone. Plus, home insurance pays additional living expenses, such as a hotel and meals, if you can't stay in your home during repairs from a covered loss. Now, if you're a renter, don't think you're off the hook here. Renters need renter's insurance because your landlord is not responsible for your personal possessions in the event of a theft or a natural disaster. It also gives you liability coverage and additional living expenses if you have to move out while covered repairs are made. Most renters, unfortunately, don't have renter's insurance. So if you are a renter and you're going without any coverage, I want you to go out today and get it. A typical renter's policy costs much less than you might think. It's just $185 a year on average across the United States. That's really inexpensive coverage for all the protections that you get from renter's insurance. The ninth product is disability insurance. Did you know that you're more likely to suffer a disability than you are to die before the age of 65? That's an incredible statistic. And when a long-term disability occurs, the average absence from work is 2.5 years. Think about what you would do if you couldn't work for 2.5 years. Disability insurance is never required, but it is a very wise policy to own. It pays a percentage of your gross income, like 60 or 70%, if you can't work due to a disability, illness, or accident. Remember that health insurance only addresses your medical bills. It doesn't pay your living expenses, like housing or food, if you can't earn money for an extended period of time. That could certainly cause a major financial strain for you or family members who depend on your income. Social Security is only available after you've been out of work for a year and are completely disabled. Workers' compensation insurance is only for work-related injuries. So if you don't have the option to purchase a disability policy at work, or if you do but it's not sufficient, be sure to purchase a private policy for yourself and have enough emergency money set aside to tide you over until coverage begins. And the 10th and final financial product that you need for financial security is life insurance. Unfortunately, you'll actually never get to enjoy the benefits of life insurance because the payout goes to your beneficiaries after you die. Life insurance is critical when your death would create a financial hardship for those you leave behind, like a spouse, children, or aging parents. Now, if you're single or no one depends on your income, you either need a very small policy just for your funeral expenses or none at all. But if you have a stay-at-home spouse who cares for your children, you definitely also need a policy on his or her life to cover future childcare costs. Think about what it would cost you to have full-time childcare if your stay-at-home spouse were not around. It could be very expensive. There are two basic kinds of life insurance. I'm not going to go into the details here because it gets pretty complicated, but I prefer term insurance because it's inexpensive and gives you the most benefit for the dollar. A basic rule of thumb is to purchase at least an amount that's 10 times your income. So if you make $50,000, you might need a policy that would pay your beneficiary $500,000. But factors like the number of children you have, education expenses, mortgage payments, and the lifetime income needs of a surviving partner or spouse should come into play. If you have life insurance through work, but it isn't enough, you can always buy additional policies to make sure your family is fully protected. You can have more than one life insurance policy. It's not pleasant to think about what bad things could happen that we need insurance for. And maybe that's why so many people are underinsured. But managing different types of risk is actually easy in a financial sense because most of them can be passed on to a third party, like a health or life insurance company. Having the right bank, retirement, and investing accounts, plus enough of the right kinds of insurance, is essential for your security. These products allow you to monitor your money, accumulate wealth, and protect yourself and those you love from something unexpected jeopardizing your financial security and happiness. I want to thank everyone who submitted reviews in iTunes. That really helps the podcast get visibility so new listeners can find it and I can help more people get the financial information they need. So if you like the show, please take a moment to submit a quick 5-star review in iTunes or wherever you get the show. And to keep the money conversation going, join my private Facebook group called Dominate Your Dollars. It's filled with like-minded people who are reaching for and accomplishing big financial goals, just like you. To request your invitation, visit Dominate Your Dollars on Facebook or send me a text message for immediate access. Just text DOLLARS to the number 33444. I hope to see you in the group. That's all for now. I'll talk to you next week, courtesy of Money Girl, your guide to a richer life.